Okay, so what is permanent insurance? Understanding the nuances can feel kind of crazy. It's like opening a complex scientific novel, but don't you worry, I've got you covered. Let's dive into what permanent insurance is and why it matters and how it can fit your financial story. I'm so excited. I hope you're ready. So, here are the types of permanent insurance. Permanent insurance isn't a one size fits all deal. There are several types, each with its own benefits, quirks, and advantages to you. So, you have whole life insurance. Whole life insurance is like the dependable, never aging friend who's always there. It offers coverage for your entire life with fixed premiums and a cash value component that grows at a guaranteed rate. Okay. Universal life insurance. Think of universal life insurance as a flexible counterpart. It provides lifelong coverages but allows you to adjust the premiums and death benefits. The cash value grows based on current interest rates, which can be a plus or a minus. The next we have is variable life insurance. Variable life insurance is for the risk takers out there. It combines lifelong coverage with investment options. The cash value can grow significantly if your investments perform well, but there's also the risk of losing money. Index Universal Life Insurance. This one's a bit of a hybrid. Index Universal Life Insurance ties the growth of your cash value to a stock market index like the S&P 500. It offers a balance between growth potential and protection against market downturns. Okay, so here are some features. I still hope you have your pen and paper. Permanent insurance comes packed with features that set it apart from other types of insurance. So here we go. It provides you with lifelong coverage. One of the standout features is a lifelong coverage option. As long as you keep up with your premiums, your beneficiaries will receive a death benefit no matter when you pass away. These policies also have a cash value component. A unique aspect of permanent insurance is the cash value component. Over time, a portion of your premiums go into a savings like account that grows tax deferred. You can even borrow against it or withdraw from it. Now, for the premiums. The premiums for permanent insurance are generally much higher than term life insurance. However, they remain level throughout the life of the policy, providing you predictability in your budgeting. So let's talk about policy loans and withdrawals. You can take loans against your policy's cash value. These loans are tax free, but they do accrue interest if not repaid. They can reduce your benefits, so you want to know that about your policy. Benefits of permanent insurance. There are several perks to having a permanent insurance policy in your financial toolkit. What that means is you can have them both. More on that later. Guaranteed death benefit. No matter when you pass away, your beneficiaries are guaranteed to receive the death benefit, providing peace of mind and financial security. There are also some tax advantages. The cash value grows tax deferred, meaning you don't pay taxes on the growth until you withdraw it. Plus, the death benefit is generally paid out tax free to your beneficiaries. The next is investment opportunities. With options like variable and index universal life insurance, you can potentially grow your cash value significantly through investments. The next thing we're going to talk about is flexible premium payments. Policies like universal life insurance offer flexibility in premium payments, allowing you to adjust based on your financial situation. Now, with everything, there are some drawbacks of permanent insurance. Now, despite its benefits, permanent insurance does have some drawbacks. And so you have to be prepared for that when you are trying to identify what programs are going to be the best for you. They have higher premiums. The cost of permanent insurance is significantly higher than your term insurance, which can be a barrier for some people. Complexity. Permanent insurance policies can be complex and difficult to understand without professional guidance. Surrender charges. What is that? If you decide to cancel your policy in the early years, you may face surrender charges, which can eat into your cash value. The next topic is policy management. Managing a permanent insurance policy can be more hands on than term life insurance, requiring regular reviews and adjustments. Next is comparing permanent and term life insurance. Choosing between permanent and term life insurance can be like deciding between renting and buying a home. Each has its own set of pros and cons. Okay, so duration of coverage. Term life insurance covers you for a specific period, for example, 10 to 30 years, while permanent life insurance covers you for your entire life. Cost differences. Term life insurance is more affordable, making it a popular choice for young families or those who are on a budget. Permanent insurance, though pricier, offers lifelong benefits and cash value accumulation. Cash value accumulation. Only permanent insurance policies have a cash value component, which can be a useful financial tool. Next is suitability for different life stages. Term life is often best for temporary needs like covering a mortgage or raising children. Permanent insurance is more suited for long term goals like estate planning or leaving a legacy. Choosing the right permanent insurance policy for yourself doesn't have to be difficult, but you may need some help. Selecting the right policy involves a bit of soul searching and financial planning. The key here is you need to sit down and know your numbers and consider what you want to achieve with your insurance policy. Are you looking to leave a legacy, ensure lifelong coverage, or are you looking to build cash value? The next thing we want to look at is understanding your risk tolerance. Your comfort for investment risk will influence whether you opt for a more stable whole life policy or potentially higher growth variable policy. Consulting with a financial educator can help you navigate the complexities and choose the best policy for your needs. Now, here are some common misconceptions about permanent insurance. We're going to debunk some myths that often surround permanent insurance. The first is only for the wealthy. This is untrue. While permanent insurance can be a tool for wealthier individuals, it is not exclusive to them. Many policies offer flexible options that can fit various budgets. Oh my God, it's just too complicated. Yes, permanent insurance has its complexities, but with the right guidance, it's manageable. Think of it like learning to drive. It seems scary at first, but you can kind of get the hang of it. Next, it's a bad investment. Some people view it as a poor investment compared to other options. However, it's important to remember that its primary purpose is protection, with investment opportunities being a secondary benefit. How to apply for permanent insurance. The application process for permanent insurance involves several steps. Contact your group. Okay, I'm just saying. The application process. You'll need to fill out an application detailing your personal and health information. Sorry. Um, Sometimes there are medical exams. Don't get scared. Most policies require a medical exam to assess the health status and determine your premiums. This is common. And then there's an underwriting process. And this involves evaluating your application, your medical exam results to decide on your coverage and premiums. All very easy things. Managing your permanent policy is very important. So you should be taking a look at it and reviewing your policy regularly. Owning a permanent insurance policy means staying engaged and proactive, which can be beneficial. Review your policy regularly. And I think this is for both term and permanent. You want to make sure your policy meets and aligns with your financial goals and adjust your coverage as needed. Your life changes, our life changes, so more coverage might be needed. Be prepared and adjust your policy accordingly. Get an agent that's going to help you get familiar with your statement so you can keep track of cash value, premiums, loans, and withdrawals. So now I want to pause just a bit because my mouth is dry. I provided some examples, and this is going to also be included in the blog post. So here's an example. John, a 40-year-old business owner, chooses a whole life insurance policy for its stability and guaranteed growth. It provides him peace of mind and steady cash value build up for the future. Example 2. Universal life insurance. Lisa is a 35-year-old entrepreneur, prefers a universal life insurance for its flexibility. She adjusts her premiums based on her business's performance, ensuring she always maintains coverage. Example 3. Variable life insurance. Mike is a 45-year-old investor and opts for variable life insurance. His risk tolerance allows him to leverage the investment options, aiming for a higher cash value growth. In conclusion, we don't want to make this complicated. We want to share that permanent insurance is a versatile tool that can provide lifelong coverage, build cash value, and offer various financial benefits. While it may come with higher premiums and some complexity, the peace of mind and financial security it offers can be valuable. Here are some frequently asked questions. What is the difference between whole life and universal life insurance? Whole life insurance offers fixed premiums and guaranteed cash value growth, while universal life insurance provides flexibility in premiums and death benefits with cash value growth tied into the interest rates. The second question is, can I cash out my permanent life insurance policy? Yes, you can withdraw from it or take a loan against the cash value of your policy. However, withdrawals may reduce the death benefit and loans accrue interest. How are permanent insurance premiums determined? Okay. Premiums are based on factors such as age, health, lifestyle, and the type and amount of insurance coverage that you choose. The next question is permanent life insurance a good investment? Permanent life insurance can be a good investment for those looking for lifelong coverage and cash value component. However, it is essential to consider your financial goals and your risk tolerance. Well, what happens if I miss a premium payment on my permanent life insurance policy? Hmm. Missing a premium payment can reduce your coverage or lead to a policy lapse. This is not what we want. Some policies have grace periods, and you can use your policy to use for missed payments. I hope you guys got a lot from this. There's a lot. I have a small favor to ask. If you like this content, leave your comments and questions below and let me know what your thoughts are. Would you like to see more of this? Like I said, this is a longer video. But if you need a policy review or you need some help assistance, drop me a link in the comments and maybe we can get together and schedule some time. I want you to make it a super fantastic day. And to your success, Make it a great and fantastic day.